Glad to know you're still with us. The NGX Oil and Gas Index fell by 10.12% in the first half of 2025, closing at 2,437.47 points from 2,712.06 at the start of the year, making it the only sector index to decline, even as the NGX All-Share Index rose by 16.57% to 119,978.57 points. In contrast, Consumer Goods Index surged by 52.21%. And among the 7 oil and gas stocks, only Eterna and TotalEnergies gained. Conoil led the losers, dropping 39.44%, followed by MRS 28.42%, Aradel 13.96%, Oando 16.74%, and Seplat 4.39%. Analysts blamed late financial results, weak dividends, and investor concerns over bonus structures. So on Park this, I'm joined by Oladipo Ajayi, Head Fixed Income and Forex Chapel Hill Denham Securities. Thank you so much for joining me today, sir.
Good morning. Thank you very much for having me on Patrick Show.
All right, good to have you too. Now, oil and gas sector emerged as not only the worst performing index, but at least it's like the only one, not even like, it's important to mention that it is the only one in the negative territory. Why is that?
Well, when you look at it from, I will look at it from 2 different perspectives. I will look at it globally, what's happening in the global oil market. There's a lot of volatility that we've been seeing in the global oil markets. We'll be seeing the unrest in the Middle East, which we feel to a great extent will actually lead to increase in oil prices. And don't also forget the Liberation Day in the U.S., where President Trump announced tariff on importations to United States. On the back of that, we feel that will actually stiffen global growth, which in turn will actually reduce oil production and oil consumption. And on the back of that, the market feels that this will actually draw down the price of oil. And aside that also, the market's also looking at what is happening globally. If you are expecting global economy to actually head towards recession, it simply means that production will drop. And if production drops, it simply means that the oil price will drop as well. And also the OPEC and non-OPEC members has also agreed to actually increase oil production to actually fill the vacuum of deficit. What that will also mean that you actually push prices downward. These are some of the things that markets actually considered and that led to what we saw. And aside that also, when you look at what's happening in the oil producers and listed on the NGX, you will notice that most of them did not actually declare great dividends. When you look at a company like Aradel that is trading around 500 naira, only declared 22 naira as dividend. You look at a Conoil, declaring 3.50 kobo as dividend. Seplat that is trading circa 5,000 naira. Declared about 263 naira as dividend, and Total declared 14 naira as dividend. And we even have some of them that never declared dividend. You look at Eterna, you look at Oando, you look at MRS, despite the level of prices where some of these instruments are trading in the market, they never declare dividends. And some investors, we have investors that are looking at capital appreciation. But some investors, they actually invest for dividend income. So when they started noticing that some of these companies are not in any way going to actually declare dividend for the year, they will actually build ship. And that's exactly what most of them did. They actually sell down some of these holdings for them to actually invest in other sector. And I think the signature of all eye for the year has remained the consumer names that has gained about 52.21%. And that this is not something that is unexpected, because we called this early in the year that if you have money, put it in consumer name, considering that we know we're expecting FX stability this year. And coupled with the fact that when you look at the operational activity last year, they were excellent, but just that most of them need to actually book exchange losses, and that's what actually eroded the bottom line last year. So we feel that even if they replicate the operational activity levels last year, they will be able to boost significant profit, and that's exactly what we start seeing in some of these consumer names.
Well, that's quite interesting. I like where you started from, talking about how the market is sort of mirroring what's happening in the real world, whether you're looking at volatility in crude oil prices. But I'm still looking at, and they're also pricing in some local news that are probably good. For example, you want to look at the improvement in crude oil production. You also want to look at, some of the improvements that we have seen so far, whether you want to look at the downstream sector of the Nigerian petroleum industry, whether you're looking at the prices of PMS, or even Dangote's announcement of the August 15th start of, direct delivery of some of those products to marketers. Are these some of the things that maybe investors should also look at to inform their decisions?
Well, if you look at some of these news, look at, for example, Dangote looking to actually commencing in the month of August, they want to actually direct delivery to buyers. And what that means is that it's good for Dangote as a company. But for competitors that are playing in the downstream, it may not be a very good news to them. And the Dangote in question is not listed yet. So if that kind of news is in the market and Dangote is listed, what the market would have done is that a lot of people that have started buying Dangote shares, knowing fully well that they would be able to ramp up sales going by that strategy.
What about some of its listed partners? Some of its listed partners, doesn't that offer some sort of, consolation?
Well, if you look at for like MRS, one of the reasons why MRS actually are suffering this is that when you look at last year, MRS is one of the best performing stocks on the exchange last year. But coming into this year, and after the result for full year was released, the market noticed that MRS never declared any dividend. And looking at the level of gain that actually happened in the stock last year, and the company never declared any dividend this year for the full year 2024. Of course, it calls for concern. So, and like I mentioned, even most portfolio managers like PFE, they only invest in dividend-paying stocks. So when they start seeing that there's no sign that this company will actually declare dividend, of course, they would rather sell down some of those, they will sell down their holding to actually move into other stocks. So I feel that what's currently happening is when you localize what's happening, it's based on the management decision. You look at like an Oando. Oando at the time last year was trading 7 naira. It peaked around 18 naira. Currently, it's trading around 15 naira. And when you look at that level of volatility that has happened in Oando, one of the reasons why we start seeing that aggressive drop is one, because there was no dividend that Oando, despite that huge bottom line, and they declared both in their full year and also in Q1. Oando never announced any dividends in that regard. Even the bonus share that Oando announced is going to be done within a span of 3 years, and that is not market norms. Market norms is within 90 days. So when you start seeing things that is outside the norm, you begin to doubt the sincerity of the management of such company. And I think that's what's happening with a company like Oando. Of course, Aradel for me, I think is a valuable stock. Currently, there's a lot of holders of this instrument that are actually bought at a very low level, looking to exit the market. And I think that's what's currently putting pressure on this company. When you look at the company is well diversified, they're even into aside the oil exploration, they're into refining as well. So when you look at the whole structure of the company, it looks good. But because they are still seller of this instrument in the market, it's actually putting a lot of pressure on some of these names. But when you look at it all in all, I think the oil and gas sector will still actually rebound. But will it actually perform as much as other sectors like the insurance that has done about 5%, or the banking sector that is another great baby in the house that has done very close to 19% this year? I'm not sure the oil and gas will be able to actually rebound and actually meet that level. But for me, I think that to a great extent, we'll likely see a bit of rebound in the share prices of some of these stocks if the management start declaring dividend. Of course, by now we're expecting the half-year results, and I think when this thing is declared, the results are declared, I'm sure if they actually decide to actually pay interim dividend, it will actually help to actually move the activity, expect the activity on some of these things.
Should we say Oando is back to its old ways, or it's better now? But away from that, let's go to Eterna. You talked about Eterna and how that, of course, we understand that it has not declared dividend. But of course, it still remains the standout performer in the sector. It has gained 76.95%. That, of course, was during the half-year season. Is this based on fundamentals, or is it just about its relatively cheaper entry price? Could that be what fueled what we're seeing here?
So what happened was Eterna has been posting negative income for some time now, and but when they released their full year result 2024, the market saw that huge bounce back by Eterna. So automatically the market could actually see that the company was actually underpriced, and a lot of people are now seeing value in the name, and that actually led to that level of activity that we saw in Eterna. And just like what you said, Eterna has done over 76% return this year, and the return is premised on fundamental, is premised on the performance of the company, is premised on the valuation of the company, and that's one of the reasons why a lot of people were actually running to actually invest in the stock, because when you look at the return, the full year reports, and in tandem with the pricing of the stock as at the beginning of the year, there's no correlation. It simply means that the stock was it was heavily underpriced at that particular point, and that's one of the reasons why we saw that aggressive demand in Eterna.
Right. So still back to Oando. I mean, it was 2024 was a very good year for it, especially because it emerged as the top performer on the NGX after July. I guess that sort of also propelled the sector to the best performing at 160.01%. But moving forward, do you see another stock lifting the sector? Or let me put this in another way. Do you see the sector doing better in H2? I think you've talked about it doing better in H2, but of course, what stock do you see lifting that particular sector? Or will it be the case of so many stocks, pulling their weight on the sector?
I think Aradel will do very well in H2, and just like what you mentioned on Oando, I think Oando can actually still replicate what he did in last year, and we may not see that movement from like a 7 naira to around 78, 80 naira. We may not see that level of movement, but we still see an improved performance of the stock in H2, and this is premised on what is expected from the company. You look at their full year result; it was very great, and you look at their Q1 result that was also released. It shows that the company is still on the right path. So, and I feel that if they can continue in that line, and they also post a very good result in H2, in Q2, market will actually respond in the same dimension to that as well. Another good company is also Seplat. Seplat, a lot of people are looking at it based on the pricing that is heavily overpriced, maybe because of the amount that is being sold in the market. But when you look at it in terms of the value, Seplat still is one of the good stocks that you can see in the oil and gas sector. And when you look at Seplat from the fact of fully diversification, the company is well diversified both in oil and also in gas. When you look at their performance as well, you also replicate the level of activity that the company is doing. The company has been expanding to a great extent, and we will feel that that will also impact their bottom line. And that by the time they release their results in H2, we feel that also should also impact the market positively. Also, Total, we feel that Total is more like a stabilizer. Total will always bring something to the table, and it may not be something aggressive like what we've seen in the parts of the Oando and Aradel, but they actually bring that level of stability to that index, and we feel that also will be replicated in Q2.
That's interesting. I think you've touched a bit on consumer goods, but of course it's important to note that it emerged as the best performer, and that of course is in line with projections that we heard last year, which you also alluded to. Do you see the sector sustaining this momentum for the remaining part of the year? That's H2, or do we anticipate profit taking, price correction, and the like? Maybe before we go, you should also look at the industrials, which of course escaped by the whiskers at 1.85%. This morning, as of yesterday, close of trade yesterday, it was less than 1%. That's for industrials. While insurance recorded a 5.23% gain, which of course by now currently stands at 11.06% year to date. I'd like you to talk to us about, tie all this three together, put some press for time. I'm just looking at how you can talk about all of this together, the sectors to watch out for, what the playbook should be for investors.
Well, the consumer sectors to actually still remain the signature of all eyes because of the performance of this sector. And like what I said earlier, we expect the sector to actually continue in that stride. The sector is still, when you look at some of the valuation, they are still below expectations. And by the time we start seeing the result of Q2 as well, I think that will also propel another round of activity on some of these names. We've seen aggressive movement on Nigeria bureaus, international bureaus. We've seen Ascon, we've seen Guinness, we've seen what is happening in Better Glass, and some of these names as well. Some of them is as a result of maybe expansion on the part of management or some other strategic decision of the management. So, and I feel that we'll still see more of that happening in Q2, and that will actually drive the sector. Another sector is the banking sector. When you look at where we are currently seeing some of these names, you see a GT already trading north of 80 naira. You see a Sterling that's already trading above 50 levels. But you still see some names that you feel that they are yet to move, and they has a lot of value that they can still bring to the table. Names like Access Bank in the market, they still has a lot of value, and they can still move because the companies or the management said that they are currently they are not doing any more acquisition. What they are doing this period is more like consolidation, and we feel that will impact the activity and the valuation of names like that. Also, industrial sector is also a very good one that I feel that will also do well at the later part of the year, considering the activity that the government is trying to embark on. And also, when you look at the insurance company, like you mentioned, that we've seen improved activity in that sector, and beyond the 5.23 that the sector actually posted at June, at the end of the H1, that we've seen another level of rally in that sector. So we feel that that is sustainable. And because of that, we feel that will actually impact the overall activity in the market. And by the end of the year, I won't be surprised if the NGX Index actually perform over 30% this year.
Over 30%, that's a big one. Well, we'll look forward to that. Thank you so much, Oladipo Ajayi, Head of Fixed Income and Forex, Chapel Hill Denham Securities, for your thoughts and time on the show today.